Hello friends, in this video I'll show you how I use pivot points in my trading. I use a special type of pivot points called Camarilla via on EURUSD for our chart. To get pivot points, you go indicators, then you type pivot points standard, you choose standard, then you go into settings and you choose type, you choose Camarilla. I use Camarilla, not traditional. Well, traditional are also useful, but Camarilla is the best. Then we go to monthly. I will demonstrate you on the monthly how you can use them. Let's go 100 back in time. I usually unclick the pivot because I don't need it, because pivot is not the same here as the close. And then I unclick S2, I don't need it. And for some reason level 5 doesn't plot even if you click it, so we unclick it, we don't need it. So let's change it to blue is better, or black. Let's change it to black. So now we have all the pivots, 4 levels. We have monthly levels. Let's change the middle opening range. I call this opening range to red so that you would see. This R1 to S1 is the opening range. In the middle we have the close. It's a very crucial level, the close or the open, because it's the same. So this is the opening range of the month. When the new month starts, you have this opening range. If you know Mark Fisher, he taught about opening range being like foundation of the house. It's very important. Without this, you don't have the structure of the month. This is the base on what you should, this is the most important what you should look at, the opening range. So here the month started, price stayed in the opening range and it broke up. So it's a signal that we're looking for longs. If price is above R1, we look for longs. If price is below S1, we look for shorts. And then if we add the yearly Camarilla pivot points along to the monthly, you will have even better picture. You will know where the price is going on yearly trend and on monthly trend as well, and you will know what bias to take. So here it's a long bias. Price is above opening range. You see, usually price go to R3, sometimes to R4. I call this reversal level, R3 and S3. This is where the price usually trades during the months. R3 is a reversal level. Price here usually most of times reverses and goes back to R1 or to the close, and often even to another reversal level on the other side, which is S3. So that's it. Price did a typical circle. It broke up, went to the reversal level where just above it, it makes a circle, reverses back to S3 and then back to the close. Very typical behavior. The next month we see again the circle between price went to S3, returned back to the close. It did it 2 times. You see, it went to S3, returned back to the close. S3, returned back to the close. Actually 4 times. And it's 1, 2, 3, 4, 3 times back to the close. The same behavior. Now the next month, price is bullish bias. You see, price broke above R1. I recommend you to use monthly. They are very accurate. Let's add also the level 5. I use a different indicator to plot level 5. It's very useful. You need to have it level 5. So here a price broke above R1 opening range. Price is bullish, and it broke through the ceiling. R4 is the ceiling, S4 is the floor. It broke through the ceiling and reached as R5. R5, and usually when price hits R5, it goes back to R4, back to the ceiling. Here it went back to the opening range, and then it did another shoot to R6, which I don't use. I would never buy here. This is extreme. Now next month, bearish bias. You see, price went below the opening range. You look that you need to sell. Though you would never buy here if you see price broke below. uh, the opening range. Then it went to S3. You see reversal level failed to reverse here. Usually it reverses here and goes back to the opening range or to the other side. And then it broke through the floor. Okay, you know you need to sell. So price pulled it back somewhat and crashed it exactly to S5. This is the bottom. I would never sell it here. So this is the bottom of the month. Now next year you see bullish trend above opening range to the floor, to the ceiling, and it never managed to break through. You see, to the pip, and went back to the opening range. You can see it's a reversal above R3, very common behavior. Reversal above reversal level. Oh, next month, again reversal at the reversal level. Several times price was bouncing from R3. And then it went to the other side, to S3 reversal level to the other side. Now it's again bullish trend. Here you see price breaks through reversal level. And then it goes through the ceiling to R5, bullish uptrend. You know immediately that it's bullish because it's above opening range, above R1, and then it should have reversed here, but it didn't. I would maybe short here because it looked like it's reversing, but I tell you, you need to use also yearly Camarilla Pivot Points along with monthly, and then you will know. And then I also use moving averages, so I use different tools to tell me the direction. So it went to exactly here. You see it went to R5. Next month price is below opening range. It went again reversal level here. Could have reversed here back to the close, but it didn't. So it stayed at the reversal level here between the reversal level and the floor. Never managed to break the floor. This is the bottom of the month, the very bottom, breakout level. Next month, bullish trend. Price breaks through the ceiling. You see it broke through the ceiling, pulls back to reversal level, then shoots to R5. Exactly to the pip, you see. So the next month the same thing, but price didn't make it to S5. It broke through the floor but never made it really. Again, the next month price bearish bias. You see very clearly below opening range, bearish bias. No reversal at S3 here. Breakout through the floor S4. Price makes it to level 5 S5. You can call it S5. Sometimes they call it the low 5. They use lows instead of S and use highs instead of R's, but it's up to you. So it can be H5, H3, high 5, or R3, and here it can be S4 or low 4, etc. Now the next month, we know it's bullish bias because price is above the opening range. Price went to the reversal level, kind of wanted to reverse but never did. Then it broke through the ceiling, through the monthly ceiling, and went into R5, slightly above, but I wouldn't buy here. And then you know already that when price is at level 5, usually it goes back to the ceiling, back to the close, or even somewhere here, usually open range close. So it's very common behavior, return back to the mean, back to the ceiling. Here the next month, bearish bias, reversal at the reversal level. The level, this area between R3 and S3 is the value zone. This is a monthly trading zone. Reversal, one reversal, and second reversal. Price returns to the opening range. Here is the same. Price goes to the floor, you see, but never manages to break through and returns back to the opening range. Here next month, see breakout above the monthly ceiling. Price didn't make to the ceiling. It broke through the ceiling but never made it to the level 5. Not this month, not in June, but it made it next month. You see, next month it reached it. Usually if it breaks through the ceiling or through the floor, it will make to S5 or R5. If not this month, then next month. You see, trend continued to R5 next month. Next month, bullish bias. Again, no, you have to buy. Here it's bullish bias. You again know you have to buy. Prices breaking through opening range to the upside. Here you see it would be a tricky situation, but afterwards you know it's bearish bias. You need to sell. You know it. So price breaks in the end. Price breaks through the floor and goes to S5. Exactly. You see exactly. It's very accurate information we get from Camarilla Pivot Points. Here is bullish bias. Price breaks above opening range, goes to the reversal level, goes back to opening range. Then it's again at the reversal level, returns back to opening range. Very common. Here it's bullish bias. You know, price breaks through the ceiling and makes it to R5. And what it does when it gets to R5, it goes back to the ceiling, as I told you. And then it can do another shot to the R5, or it can go to the opening range, but it's less now. At least we know it goes to R5 and it returns back to the ceiling. Very common. Back to R4. R4 is the ceiling, S4 is the floor of the house. And this is like a foundation opening range, you know. That's how I would compare it. So next month, the same behavior. You see a price is above opening range, breaks through the ceiling, through the monthly ceiling, and where it goes? It goes exactly to R5, to the pip. You see next month though. Next month it makes it to S5. Didn't make this month, but next month, as I told you, you need to have for 2 months, always for 2 months Camarilla Pivot Points, because very often price gets to R5 next month, to the pip, you see. So we go again. Here we have opening range. Price went above opening range. Reversed where? At the reversal level, R3. Went where? To another reversal level. Very often you see this behavior. Then at this reversal level it went back to opening range. Again to reversal level. So here we had a break through the floor. You see, through the monthly floor. Very often when price breaks through the monthly floor, it goes back to S3 or opening range, and then it shoots down to S5. Here it pulled it back all the way to S3, but they still made it to exactly to the pip. Next month you see it made it to S5, but the pullback was too big. This is not so common. Usually price pulls back less than this. It's too big pullback, but it did make it to S5, you know. Yeah, I would look for shorts for sure, but this is too big pullback. Anyway, here next month, bearish bias. Price is below opening range, and again it breaks through the monthly floor S4. Then you know it will make to a S5. It did make it there, you see, even this month. You didn't have to wait next month. Exactly to the pip, you see, exactly. Don't sell here. So it pulled it back to S3, to the reversal level, and then it shoots down to the floor. It can make even 2 pullbacks before it drops. So next month, bullish bias. Again, where the price ends at R5, you see, to the pip. Camarilla Pivot Points are very exact because they are using the close and highs and lows. This is not the levels that are based on the calculations. I won't go into that, you can look up, but they use important data from the previous months to build the new levels, close, highs, lows. So next month you see bullish bias again, you know for sure. You know where price is going. Price is going up because it's above opening range, above red. So, and it's going up where it broke through the ceiling. Where did it stop? Exactly to the pip at R5. Well, again next month, again breaks through. It breaks through. It reversed again at the reversal level. Went where back to the opening range, to the pip. Then you would be careful here, and it goes up again. It went to the ceiling but didn't break through. You see how exact it is, didn't break through, and from the ceiling went back to R3. Next one, bearish bias. Price, you know that it's bearish. Price is below opening range. We went to reversal level, reverse it at S3, back to opening range, as I told you. Then it's breakout through the floor, crashes all the way to S5 without a pullback. Usually you have a pullback, but here it was no pullback, it's just immediate crash to S5. Next month, bearish bias below opening range, didn't make it to S3, was very weak trading. Anyway, next month, bearish bias, you see price breaks through the opening range, didn't. You have to watch for candles here at S3. What type of candles you have will indicate you if price is reversing here or it's crashing further. Here it's crashed through the floor, and where did it end? At S5. From S5, where did it went? Back to the floor. I told you it goes back to the ceiling or the floor, back to R4, S4. From the R5, very common. Then it crashed again. So next one, bullish bias, reversal at R3. From R3 it often goes to S3, very common. Here it didn't reverse, it crashes through the floor, and where did it end? It ended at S5 precisely. And did it return to S4? Look, it did return next month exactly to S4. It took some time, but it returned back. Price tends to reverse to the mean. So next month, reversal at R3, drop below the monthly floor, crash to S5. It's crashed even to S6. I don't plot this level. Price rarely makes it there, but this month it was a big crash, so it made it there. Then went back to S4. Okay, so now you know how to use it. Now this current month, ongoing months, we had a breakout, false breakout above the floor, and now we have a breakout to below S4. Was a lot of ranging, was a lot of congestion last 2 months. But very likely now price will end here, very likely, because it broke through the monthly floor S4 and crashed to S5, maybe with a pullback, maybe straight. So I'm looking for shorts. I have been shorting here again because price was below the opening range. Here I knew I have to short because price was below here. So, but as I told, I use also yearly Camarilla posts. It changes for yearly, you know, you change here yearly, and then you go to, let's say, daily or 1 day. So now you have yearly, and if you have yearly and monthly together, you know a lot. Trust me. So here next, how do you know that 2021 was a bearish month? Because price went below opening range. It reversed at S3 and went back to the close. Then here it didn't reverse and crashed through the floor, through the yearly floor. It's a sign that it might make to S5 somewhere here. It's yearly. So I add yearly and monthly together, and then I also add moving averages and then I know how to trade, you know. So that's how one of my strategies that I use. I wish you success in trading. All the best to you.